The purpose of this video is to show you what happens when you see a great big candle on high volume. The result is that it usually follows through. When it's a new candle, a new move, then it's a breakout that's likely to follow through. So let me just show you this daily chart of Starbucks. Now, I know we're day traders, but I'm showing you what the daily charts can show you and prepare you for day trading. So Starbucks, some sort of news came out last week on Starbucks that made it go up. This is today, November 8th, 2017. And after the close on Thursday or before the open last Friday, some news came out. It might have been better than expected earnings or something came out that made investors want to buy it. So what we've got is typical volume. These are volume bars down here. Typical volume is about 8 to 10 million shares per day, whereas on this day it was 28 million. That's 3 to 4 times as much normal volume. Furthermore, a normal candle move might have been about $1 a day. That one is more like $1.50 right there. On this one, that's almost $54 a share, a little bit higher than that. And that's $57 a share right there. So that's almost $3 move when a typical move is $1 to $1.50. So when you see that, that's a move that's much more likely than not to follow through. Because what's happening here is professional investors are buying it up. Over 90% of the money that's traded in the stock market is done with professional money, like hedge funds and mutual funds and so forth. So when you see them gap it down and then run it up on heavy volume all day, that's a pretty good sign. They think it's a deal right here, and they're going to follow through with it. They think it's worth more, which is why they're piling in. Based on that news, they think it's a great deal now. Okay. Now, in spite of the fact that we have a good sense that this stock is going to follow through, we still need to know what it's going to look like and how it's going to move on an intraday basis so we can profit as day traders. So let's look at that. And I'm going to clear those and hold on just a moment. Okay, here we are. So each one of these candles now represents 5 minutes. This is a 5-day chart, and this is starting last Friday. I'm going to zoom in a little bit and pull it over. There we go. Okay, so what did they do? In the first 5 minutes of trading, they gapped it down to here, and they ran it up. So the first half hour, you got it topped out right there at about 10 o'clock. And that's about a $3 move right there. Then you have a sharp pullback and then another run up. And that's noon. So they've got a lot of up moves, and you hit resistance right there at lunchtime. And when you see, okay, look at all these green candles in a row. When you see your first red candle, it's a pretty good indication the move is over. So if you had bought somewhere down here, that's where you want to get out. And in fact, you would have had 1, 2, 3, 4 down red candles in a row, which is about a 75-cent pullback right there. So definitely you want to lock it in while you can. And then it does run up again, and it moves about $1 up again into lunchtime, and you could have made some more money there. Interestingly enough, from that point, from the high resistance of about $57 a share, it goes down through the rest of the day, down to here. On Monday, let me pull it over. Okay, on Monday, they gapped it down a little bit. It went up. It then went down again for the first hour. And then you've got a pretty good run up into and past lunchtime till about 12:30. And then you've got to top out. Then lunchtime is slow for the first 12:30 to 2:30, pretty choppy. No big waves there. And then you've got a pretty decent move into the close. Okay. Now, let's zero in a little bit more. Let's look at yesterday and today. Keep in mind, this is a stock that we're still thinking and believe that it's going to keep going up. Another little gap down, and then it moves up into about, what is that, about 10 o'clock. Again, you got about a 10 o'clock to 10:30 reversal time. And it drops into the lunch hour. And then finally it moves up the rest of the day. Again, this morning they gapped it down, ran it up for about a half hour. It's kind of a repeating pattern. They gap it down, and then they run it up, or they gap it up and run it up a little bit, quickly sharp it down, and then up steadily. So they've got a couple different tricks up their sleeve on how they're going to trick people out of Starbucks shares so they can buy it up. That's what they're doing. Okay, so today, let me move it over. This is today. They gapped it down. They moved it up. Around 10:30, it hit a low, and then it's been pretty strong through the rest of the day. Another thing that you should notice is that in the morning, the waves typically last a half hour to an hour. Right here, it was a half hour and a half hour down, and then a pretty steady uptrend through the rest of the day. So in the mornings, 10 o'clock is a great time to 10:30 is about the time to watch for reversals and to be very watchful about that, to be ready to lock into your profits. Lock them in. So just be aware of that. I hope that that helped. Watch for those big candles on high volume because they're likely to follow through, once again, on a daily chart or intraday. And I hope that helps, and good luck in your trading.